Breaking news. Big updates are coming for America's seniors, and this one could put thousands of extra dollars back in your pocket. A brand new tax break for seniors, worth up to $6,000, has just been approved under President Trump's leadership, and millions of retirees are asking what this means for their Social Security, retirement savings, and overall financial security. In today's video, we'll break down exactly what this $6,000 senior tax break includes, who qualifies, when you can expect to take advantage of it, and most importantly, how it could change your monthly budget moving forward. Whether you're living on Social Security, have a small pension, or you're relying on your retirement savings, this new tax break could make a major difference in your financial future. Stay tuned until the end, because we'll also cover what steps seniors may need to take right now to maximize their benefits and avoid missing out. President Trump signed H.R. 1, the One Big Beautiful Bill Act, into law on July 4, 2025. This massive piece of legislation includes what's being called the Senior Bonus Deduction, and it's specifically designed to provide tax relief for Americans who are 65 and older. The new temporary tax break, $6,000 for individuals and $12,000 for couples, is for tax filers age 65 and older. But here's what makes this particularly significant: this deduction is in addition to the standard deduction you're already taking, which means it's essentially bonus money in your pocket. Now, you might be thinking this sounds too good to be true, and you'd be smart to ask questions. Who exactly qualifies for this deduction? The good news is that if you're 65 or older, you're likely eligible, but there are some income limits you need to be aware of. The benefit begins to phase out for single taxpayers earning more than $75,000 and married couples earning $150,000. This means that if you're a single senior making less than $75,000 per year, you get the full $6,000 deduction. If you're married filing jointly and your combined income is under $150,000, you qualify for the full $12,000 deduction. But what happens if your income is above these thresholds? Don't worry, you don't immediately lose everything. The deduction will phase out at a 6% rate when modified adjusted gross income exceeds these limits. This means that even if you earn slightly more than the thresholds, you might still qualify for a partial deduction, though the exact amount will depend on your specific income level. Here's where it gets really interesting for your tax planning. This deduction works differently than many people expected when Trump campaigned on eliminating taxes on Social Security. While the campaign promise was to completely eliminate taxes on Social Security benefits, what actually passed was this senior deduction instead. Under the One Big Beautiful Bill, the vast majority of senior citizens, 88% of all seniors who receive Social Security, will pay no tax on their Social Security benefits, according to a brand new analysis from the Council of Economic Advisors. So while it's not the complete elimination of Social Security taxes that was originally promised, the practical effect for most seniors is essentially the same. Let's talk about the real dollars and cents impact on your taxes. If you're single and qualify for the full $6,000 deduction, and you're in the 12% tax bracket, this deduction saves you $720 per year in federal taxes. If you're in the 22% bracket, you're looking at $1,320 in annual savings. For married couples getting the full $12,000 deduction, those numbers double: $1,440 in the 12% bracket and $2,640 in the 22% bracket. Over the 4 years this deduction is in effect, we're talking about substantial savings that could total thousands of dollars. But here's the critical detail that many people are missing: this is not a permanent change. The new legislation only authorizes the deduction for the 2025 to 2028 tax years. However, Congress could extend the tax break or make it permanent before it expires in 2029. This means you have a limited window to take advantage of these savings, and you need to plan accordingly. If you're doing any major financial planning, retirement withdrawals, or considering Roth IRA conversions, this temporary deduction could significantly impact your tax strategy for the next 4 years. What makes this deduction particularly valuable is its flexibility. Unlike some tax benefits that only apply if you itemize deductions, this senior bonus deduction is available regardless of whether you take the standard deduction or itemize. The OBBBA provides an additional, separate deduction for seniors of $6,000 per individual from 2025 through 2028, and also makes it available to itemizers. This means virtually every eligible senior can take advantage of this tax break without having to restructure their tax filing strategy. Are you starting to see how this could impact your retirement finances? If you're currently paying taxes on your Social Security benefits, this deduction could potentially eliminate that tax burden entirely for many seniors. If you're already not paying taxes on Social Security due to lower income, this deduction could reduce or eliminate taxes on your other retirement income like 401k withdrawals, pension payments, or investment income. There's another important consideration for tax planning that many financial advisors are discussing with their senior clients. Since this deduction is temporary, it might make sense to accelerate some retirement account withdrawals during these 4 years while you have this extra deduction to offset the tax impact. Of course, this kind of strategy depends entirely on your individual financial situation, and you should consult with a tax professional or financial advisor before making any major decisions. One question I keep hearing is whether this affects state taxes, and the answer is that it depends on your state. This is a federal deduction, so it only directly affects your federal income taxes. However, many states base their tax calculations on your federal adjusted gross income, so you might see some state tax benefits as well. You'll need to check with your state's tax authorities or a local tax professional to understand the specific impact in your state. The timing of this legislation is particularly significant because it affects your 2025 tax return that you'll file in early 2026. This means if you're doing any year-end tax planning right now, you need to factor in this new deduction. Are you considering making charitable donations, selling investments, or taking retirement account distributions? This $6,000 deduction could change the tax implications of all these decisions. Looking ahead, what are the chances this deduction becomes permanent? While nobody can predict the future with certainty, the fact that Congress could extend the tax break or make it permanent before it expires in 2029 suggests there will likely be political pressure to continue this benefit. Given that seniors are a significant voting bloc and this type of tax relief is generally popular, there's a reasonable chance we could see extensions or even permanent status for this deduction in future legislation. For those of you managing your retirement income carefully, this deduction opens up some interesting possibilities. You might be able to convert more money from traditional IRAs to Roth IRAs during these 4 years while having this extra deduction to offset the conversion taxes. You might be able to take larger retirement account distributions without jumping into higher tax brackets. You might even be able to realize some capital gains on investments that you've been holding onto for tax reasons. The key takeaway here is that this $6,000 senior deduction represents real money in your pocket, but it's not automatic. You need to claim it on your tax return. Make sure your tax preparer knows about this deduction, or if you file your own taxes, ensure you're taking advantage of this benefit. Don't let this valuable tax break slip through the cracks because you weren't aware of it or forgot to claim it. As we wrap up, remember that tax laws can be complex, and everyone's situation is different. While this deduction will benefit the vast majority of seniors, the exact impact on your taxes depends on your total income, filing status, and other deductions you might have. Consider consulting with a tax professional who can help you understand exactly how this new deduction fits into your overall tax strategy and retirement planning.